Good morning, everyone. Welcome to Cashflow Basics with Calxa. My name is Kate, and I will be hosting the session for you today. This session today builds on the topics we've covered in the previous two webinars this week, taking the budgets we've created, applying the cashflow settings and timings, and preparing a three-way forecast. Three-way being defined as a P&L forecast, balance sheet forecast, and cashflow forecast. These webinars are designed to be useful for you, so please make use of the chat and Q&A boxes, and I'll try to get your questions as we go along. If I don't get to them during the session, you will receive a follow-up after the webinar has finished. So let's take a look at the agenda for today. First, we'll be looking at the budgeting requirements you'll need in order to create a three-way forecast. This centers around your P&L and balance sheet budgets. Then we'll take a look at cash flow settings, including nominating some balance sheet accounts, which will allow Calxa to do the budget calculations for you for things such as GST and wages, other taxes, and cash flow based off debtor and creditor day timings. And then we'll look at presenting the reports of your three-way forecast and also how you can include some cash flow forecasting scenarios in your bundle. So let's jump into the app itself. Here we go. And if you're familiar with Calxa, you'll know that this is the landing page, which is the dashboard screen. Today, we're going to be looking at the budgets and cash flow section within Calxa. And to start with, we're going to jump into the budget tools. Now, let's talk about our budget requirements. Our budget tools takes us into the budget manager, and this is where I can see all of my different budget versions per connected organization with Calxa. So all of my organizations I have connected will be sitting here. And I can see what budgets I have for each organization. Remember that budgets are for a purpose. So I can have an approved budget, I can have my original forecast, but then I also have a current forecast. And this is a budget that I update fairly regularly because it's going to give me the most current information that I have at hand for the next few months. That's the budget that I want to use for cash flow forecasting. There's no point using the approved budget, as by the time we get halfway through the year, some of those budget assumptions could be completely inaccurate. So we need to have a relevant budget, but you'll also need a budget that's got more than 1 year's worth of data, so more than just the current year. We're currently in the 2025 financial year, and if I run a three-way forecast from now, it's going to give me 12 months from today's date, or for my last completed month of actuals. So it would give me May through to April next year. If I don't have next year's budget in, it's going to give me a whole bunch of empty columns at the end of each report when I run the three-way forecast, and I don't want that. Now, I can quickly populate the information in these future financial years. I can see they already do have data in them, and that's why the padlocks are green. But if I didn't, I could quickly populate these financial years with some fairly realistic information using the budget factory, which can copy either actuals over or another budget version over if you want to. It's as simple as selecting the menu option and then following the prompts through and selecting the actuals or budget version that you would like to model the budget off. We go into more detail regarding the Budget Factory's functionality in our Budgeting Basics webinar that runs on a Wednesday. So there are a couple of key things. You need to have an appropriate budget and at least 2 years worth of budget information, at minimum being the current year and the following. The other thing that you need to have in terms of budget requirements are any balance sheet budgets that you might want to account for because they are material in terms of cash. Typical ones that come to mind are things like CapEx or loans, but you might also have other balance sheet items that move fairly significantly that you need to consider as well in terms of cash. You can do that in Calxa. So if we jump into our budget screen, and when it takes me through here, you can see that for this particular organization, we're budgeting at an organization level, which means that this organization actually budgets at a business unit level. What I'm going to do is I'm going to jump into that current forecast budget version. I'm going to navigate to the burger menu on the left-hand side here and open my business unit menu here. Now, the balance sheet budgets can be entered in any business unit. It doesn't matter which one you choose. However, as this is a zero organization, it does provide an unassigned business unit, and that's the one that we'll use for today. Here, what I've actually done is I have an option here and I've toggled off my empty rows. So I've only got the information pulling through for accounts that I have entered in budgeted movements for as well, which is why the screen is looking more just minimized with only the information that's been entered. And now here, what I can do is I can see here in September 2025, I have a positive entry of $250,000 sitting in my plant and equipment account. In terms of whether you enter in a positive or a negative figure, if you're increasing the account balance through this transaction, it's positive. And if you're decreasing the account balance by the transaction, it's negative, like this subsequent sale in February 2026 for $75,000. Now you can see that I've got this little note popping up here, which says asset purchase here. And in order to enter that, all I have to do is click into the cell and select this ellipses, and then I can enter in a comment here. So this is a really good way to record your assumptions. And also in the case of CapEx, you might even want to put a registration number or some kind of identifier for each of these asset purchases. If you do enter any comments, just make sure you select save after you're finished entering them as well. We do also have a comments report that you can include as part of your budget pack. Now, similarly down here, we've got a purchase of a motor vehicle here. We've also got a subsequent loan drawdown in the same period to finance this particular purchase. Then you can see in in January, we have a partial repayment of $10,000 for that loan. And as this will reduce the loan balance, it's therefore a negative entry, whereas this drawdown is a positive entry as it's increasing the account balance. Now, if I choose to show all of my empty rows, you can see that my entire chart of accounts will appear here. And if I scroll down, you'll see here that these accounts, they all have nils entered into them. And this doesn't mean that they don't have any closing balances. And that's just because when we enter figures into the budget screen, we're just recording the budgeted movements for the period. So this just displays that all of these balance sheet items don't have any budgeted movements. You'll also notice that some of these accounts have this square icon next to them. And that's because these are nominated accounts, and the figures that pull through these accounts are dictated by your cash flow settings, which I'll go into more detail about in just a moment. As a consequence of this, you'll notice you don't have the ability to budget for them as well. And that's because Calxa is doing the calculations for you. So you don't need to worry about inputting figures for these ones. If you do see a GL account that has a square icon next to it that you would like to budget for manually, you'll just need to go into the cash flow settings, remove it from the nominations, and then you'll be able to adjust the figures manually. And you can do this for all of your nominated accounts except for payables, receivables, and your bank account. Okay, so that covers off our budgeting requirements. The next thing we're going to look at is our cash flow settings. So I'll jump into them here. Down the left-hand side, you'll see a list of items that we're going to take a look at and make sure that we've got the correct settings in place for. For this last one here, cash flow statement, note that's for historical reporting, and we're not going to be looking at that in today's session. So again, these settings are set per entity. And so if you've got more than one entity, you'll be able to adjust these individually for each one. Everything here is pretty straightforward. Just select the right option from each box as you work through. For example, in which month do you pay GST? When you click the drop down, we have a bunch of schedules sitting in here, and these meet all of the New Zealand and Australian reporting requirements. If your particular schedule isn't here, you can also create a custom one of your own. Then how do you report GST? Is it cash or accrual? And then finally, which balance sheet does your GST run through as well? Now, Calxa will have pre-populated these for you, but do check that we've got the correct one selected. And if you do make any changes as you work through these, make sure you select Save Changes in the top right-hand corner before you move on to the next item. So with wages in PAYG or PAYE if you're in New Zealand, you first of all need to nominate your expense account here, and then an estimated percentage of tax that you would withhold from your gross wages budget. So just to note, nominating the account here, your expense account, doesn't do your budget for you. What it will do along with the percentage is create your PAYG budget for you. So you'll still need to enter a wages budget in the expense category. And then again, which months do you pay PAYE or PAYG? And again, choose whichever schedule is most appropriate. Especially if you don't have the same schedule as you would for GST and wages, you can choose a different one and just make sure you've got the correct liability account selected here too. In the first box in bank and equity, this is which bank accounts do you use for cash flow. So which accounts do you consider to be your day-to-day trading accounts? It may include a savings account if you're transferring money in and out on a regular basis from your trading account to your savings account. But you wouldn't include things like short-term investments or long-term deposits or anything like that. But you can have more than one bank account nominated here, like I do for this entity. And again, just check that you've selected or picked up the correct accounts for retained earnings and current year earnings as well. You can also nominate a personal drawings account here too. Superannuation, you need to again select your expense account or expense accounts if you have multiple. And again, Here you've got the option to select in which periods you pay super or KiwiSaver. And like PAYG, Calxa doesn't do the expense budget for you, but it will populate the payables budget. And then you also need to make sure you've got the correct liability account selected as well. And once you've done this, in the cash flow forecast, it will show you in the months that you pay super, how much that we expect that you'll be paying based off your schedule that you've entered here too. Depreciation, this is simply a matter of selecting both your accumulated depreciation and your expense accounts. And this tells Calxa that these are non-cash and not to include them in the forecast. With inventory here, you have a couple of different options. You can select no because you don't have inventory and you don't need to account for it or budget for it. Or if you want to budget for it, or if you want to budget for it manually. We have two options, which depending on whether you use the periodic or perpetual system. So you can select from either of them here. And we've got a little help note here for each of these different systems, and that will help you to determine which of those to choose for your particular organization. And then you just need to select the applicable accounts here that your inventory movements run through as well. I'm going to leave that as no. I'm going to jump into company tax now. So company tax is similar in that you can choose to budget for it manually if you would like, or you can choose one of the different options to have Calxa calculate it for you. And again, so you can have it as a percentage of income or profit. And again, just make sure you're selecting the correct percentage amounts, corresponding accounts that your tax repayments run through, and how often you pay these or would like to budget for them as well. So then we'll go into the cash flow forecast now. So this is where a lot of Calxa's cash flow functionality comes into play. On the left here, we have a debtors panel, and the right, we've got a creditors panel. Check that the correct control accounts are coming through. I've been selected in these areas as well. And you'll note here that we've brought through a calculated debtor day count, and same with creditors from the accounting system. A day count of 51 means that when you look at it in terms of a distribution curve, 65% of invoices will be expected to be received in your bank account 2 months after invoice date, or for cash flow purposes, forecasting purposes from budget date. If this doesn't accurately represent what you expect to happen going forward, in case something has changed, you can override this day count by selecting this button here. And then you can enter in a manual figure that you will think is going to be more accurate or more aligned in terms of what's going to come for your cash flow movements. You can also do this for creditors as well. This just needs to represent the bulk of your debtors and creditors, and just make sure that if you do make any adjustments, you select Save Changes. And then if you have any individual accounts or groups of GL accounts that are quite material to your business but don't fit this pattern, you can have a profile for each of these individually or as a group by clicking into the advanced view here. So you'll see that you've got all of your GL accounts sitting here, apart from the ones that you have already selected or nominated through the section on the left here. I can filter which accounts I want to display, so I might just pull through my income accounts here. And then you can see for the income selection, the majority of the cash flow types that are sitting here are set as debtor days. And that's the setting from the previous page with the day count. But you'll do see that I've got a couple sitting here with this profile cash flow type. To adjust this, I've done that by selecting the checkbox on the left-hand side applicable to that account. And when I've selected that, a control panel appears on the right-hand side here. So you can see here that this has been set up for debtor days, but what I can do if I open this box is I can actually select profile. And you can see that updates the profile, the cash flow type here to be profile. And I also have the ability to give it its own individual cash flow profile type, either by adjusting the sliders here, or I can just click in the box and put in a figure here to adjust the day count for that particular one. So here, if I put 5 days in here, it's going to give me the same profile as 100% current, which I'm happy to do for my donations account, because we do generally receive those 100% currently in the first month. So now that I've made those adjustments, I can just do Save Changes, and this particular GL account will have its own individual cash flow profile type that's different from the debtor days timing profile. So now Calxa will then calculate the cash flows for the accounts that aren't debtor days. Notice now that this has changed to days count profile before it distributes all the funds expected to come through the rest of your accounts that you have set up here. So this pretty much covers off all of our settings that we need in place to do our cash flow forecast. So now let's jump into our three-way forecast report. And to do that, we need to go into reports. If I wanted to, I could just choose the cash flow forecast report from our report builder, go into my three-way forecast section here. And because this is our report template library, but what I'm going to do is I'm actually going to do this through a report bundle. So I'm going to jump into my bundle section here. And I've got this create new bundle menu option on the left-hand side. And you can see here that one of our pre-configured bundle kits is our three-way forecast kit. This bundle has the P&L, the balance sheet, and the cash flow forecast, all as separate reports. And you have both a chart and a data table for each of those in the one kit. So this is a really quick way to get a really quick and simple way to get a full three-way forecast. Here, so once you've selected the bundle, you need to choose which organization you want this to be applicable to. So I'm going to make this my Melbourne AUD. That budget is going to be that current forecast because that's one that's got my most up-to-date information. And now for my account tree, I'm going to leave it as my original account tree. You can adjust this to be a different one, but just make sure that the account tree you select has all of your chart of accounts in it. Therefore, the original account tree is a good solution for that. And then you can choose which group you would like this to sit in if you've got groups set up for your report bundles. I'm going to leave that as presentations, and I'm just going to rename this three-way forecast webinar and then select create bundle. So now you can see that my three-way forecast is sitting in my presentations. So now I just need to make sure that I've got the correct report month selected. I've got April 2025. I'm happy with that. So now I'm just going to run the bundle so that we can have a look at it. So now, because it's been set to April 2025, it'll give me 12 months from April. So it's going to give me from May 2025 up until April 2026, as you can see here. I'm just going to pop this out into another screen. Okay, so now you can see here that I've got the first report we have in the three-way forecast is our net profit forecast chart. And so here, all this does, it's basically, it's a month-by-month chart, and it's giving me my, visually displaying my predicted net profit figures based off that current forecast budget version for the next 12 months. Here beneath that, we've got the underlying data table as well. And these figures will be exactly as per the budget editor. So that's why we suggest you have 2 years worth of budgets, because if I only have the current year's budget in, it would only show me up to June 2025, and then anything beyond that would have been blank in this report as well. Okay, so now this information will be exactly as per what's been entered into your budget screen, and these net profit figures here are what's being visually displayed in the chart above. Now we've got the balance sheet forecast, and the black line is showing the equity for the next 12 months, and the bars are showing how that equity is made up in terms of assets and liabilities. Then we've got the actual balance sheet report itself. Now there's a couple of things that I want to show you here. Remember how we had a budget in September 2025 for $250,000 for plant and equipment. So you can see now that this had an opening balance of 0. And then here we've got that drawdown, that purchase, and then we've also got that subsequent sale that was featured through in our budget screen previously as well. Similarly to our loans account as well. So here you can see that it's been increased by that $20,000 drawdown that we had in October 2025, and then in January it's decreased by $10,000. So basically it's picked up those movements that we were looking at in the budgeting screen before. And then just down the bottom, you've got your net assets and total equity. You just need to make sure that both of these reconcile as well, because if not, these opening balances, like the opening balance column, comes through from your accounting system. And so if these figures don't match, you need to go back to your accounting system to fix that, and then also check the last month and check that everything's just balancing. If you've played with the advanced settings in the cash flow forecast settings and potentially selected something incorrectly for the account type, then these may not well balance. So we do have some tools for finding out what those differences are as well. The next we have is a cash flow forecast chart, and the black plotted line in this chart is the forecasted bank balance. Now, if you recall, we had 2 bank accounts selected for this organization, so this is the total for both of those bank accounts. And then here, the bars show the predicted movements from each of the account types. Then into the underlying data table here. So our bank balance at beginning in the opening month, this is the closing month bank balance from your accounting system. But thereafter, these are all Calxa calculated predictions. Then we show you the P&L section. Now, the figures in this section won't match your budget exactly, and there's two reasons for that. One is that they've been grossed up for GST, and secondly, we've also passed accounts payable and accounts receivable through these accounts so that we are looking at collecting everything off the balance sheet or expending everything off the balance sheet in terms of debtors and creditors. So if I scroll down to the balance sheet section here, you'll notice there's no accounts payable or accounts receivable. And you'll see here, our plant and equipment figure has also been grossed up for GST, as well as our loans budget as well. And so with these are the actual liability section here. So we've got our GST, our PAYG, and our superannuation. These are being put through as quarterly figures, as that's when we've advised Calxa in our cash flow settings that these are the periods in which we pay these obligations to the tax office. And that's because Calxa is doing the calculations for us based off the movements that are budgeted through the P&L. And you see here that also like superannuation had a slightly different schedule, and that's why it's being paid in different months too. So you get an overall net movement as well, figure pulling through here. You'll get a bank balance at end. You can also enter in a bank overdraft if you have that available, and then we'll show you total available funds. So this is the cash flow forecast report. This report can only be shown forward from 12 months, and we can't show you any historical actuals in the cash flow forecast chart report, which is one of the reasons why we also give you the bank movement report as an alternative, because this is when we can show actuals up until a point, then forecasted figures out beyond that, and I'll show you how to do that in a moment. But initially, a couple of things to note. These bank balances at the beginning and bank balances at the end are exactly the same as the report before. The difference is how the detail is showed up throughout the body of the report. So the operating section will be exactly as per your budget. There's no GST in these figures, and there's no payables or receivables moved through the P&L. But both of these things are moved through the balance sheet, which is down here. So you can see we've got accounts payable and accounts receivable. And now with our GST line, instead of showing the when we predict your obligations will be due to the tax office, it's now showing us the full movement through the GST account. Same with all of the liability accounts, actually. It's the movement rather than when you're scheduled to pay it. But the bank account figure at end is exactly the same as the report above, and we also still show you the overdraft as well. So you've got two options. It does depend on personal preference and on your audience and what is going to suit each audience best. The last item here is how to prepare a three-way forecast, although we do have some good information on our website and Help Center library. Now, just while I'm in this bundle, I'll show you the document map here. This is just a quick way to flick between all the different reports. So you can basically see that the functionality within the app is quite intuitive. Now, I'll show you how to do the bank movement report showing actuals year to date. So I'm going to scroll down to the bank movement report in the bundle and then select configure so that I can adjust it. And then in order to make that adjustment, on the left-hand side here in my report period, it's currently been set to rolling forecast. If I want this to show my actuals up until my report month, what I can do is instead change this to start this financial year, and then I'll refresh the report. And then here, you'll see that I've got my actuals pulling through and then just 2 months worth of budgeted figures here to give me an overall total as well. If you want to keep the report like this in the bundle, it's just a matter of selecting save. And now if I go back into the bundle here, if I scroll down, you'll see that the metadata for this report has changed now too. Instead of having a report period of rolling forecast like the other reports, it's now changed to custom. So you can see here that it has a different report period than the other reports in the bundle. Now, the other thing we need to talk about is scenarios. How can I include a scenario in this bundle? A scenario being a cash flow scenario, for example, that shows me 2 different outcomes if I use a different budget. Now, to do that, I need to jump back into the report builder where I get all of my templates first. Okay. And now this is a chart that I'm wanting to use. So I'm going to select the chart section here. And here, this one here, we've got the cash flow scenarios line chart. And this is the one that I'm wanting to use today. I can also select this icon here to give me a little preview of what that's going to look at. And it's showing me 2 lines, showing my different predicted bank balances based off 2 different budget versions. So that's what I'm going to use for today. Now, for this one, I'm going to need to update the start period because this is a forecast type report. It needs to have a rolling forecast start period in order for the information to generate through properly in the report. And that's because all of our cash flow forecast reports are always 12 months forward looking. Here, this is on the left-hand side is where you would select your two different budget versions. So the first one's using my main budget, and my second one's using my current forecast. We also have the ability to and enter or select an actual scenario that's been created in our budgets and cash flow section, which we quickly touched on in yesterday's session. Scenarios are basically this section of scenarios that you can select from here are layers of small budget changes that can easily be laid on a base budget and easily be included or excluded to see their impact on a base budget. So you don't have to have two different budget versions if you don't want to. You could have the same budget version, but one overlaid with a scenario instead to see the direct impact of that on your cash balance as well. Today, I can see what the outcomes are with these two different budget versions, or if I wanted to, same budget versions, but one with a scenario overlaid. And if I'm wanting to include that as part of my bundle, I can just select save and choose which report bundle I would like that to be present in. I'm just going to call this scenario chart and then select save report bundle. Once you select save, it'll take you back into the bundle screen. And if I scroll down the bottom here, I've got my scenario chart now sitting at the bottom of my report bundle. If I wanted to move that, I can just select these arrows and place it somewhere else in the chart as well, depending on where I would like it to sit. Okay, now I think here I've covered everything off. So let's just jump back into the agenda and make sure that I have. So I'll go back. I'll just go back here. Okay, so we've got our budget requirements. And so that's what you'll need in terms of the P&L and balance sheet budgets and how to enter in budget items too. Then we also looked at the cash flow settings, talked about GST and wages and setting up the company tax settings and a couple of other items on them. Then we talked about the cash flow forecast settings with debtor and creditor days, and then how to present reports both with a three-way forecast and and also how to add a scenario chart to your three-way forecast bundle as well. Now, aside from this, we do also have our other basics webinars that run this week. So we've had reporting basics on a Tuesday, we've got budgeting basics on a Wednesday, and then on Thursday, along with cash flow, which you've just seen. And we also have dashboard basics as well. Now, if you do need help with Calxa, you can get in touch with us in any of these three ways. If you are in the app, you can just click the message icon as well. If I jump back in, so if I select this, we have this chat with us feature, and you can see that we're typically responding in less than 5 minutes on that. So that's a really quick way to get in touch with one of the team as well. You can also access help articles in here too. So if I did cash flow forecast, here we go. Step-by-step guide to cash flow forecasting here. This is a really good article from our help center that gives some guidance on getting your three-way forecast set up. If I select it in here, this resource just appears in the actual chat box instead of opening in a new window. So if you'd like it side by side, you can do that as well. Okay, well, this completes our webinar for today. Thank you so much for your attendance. It's been a pleasure presenting to you. Bye for now and have a great day.